Hello traders, my name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and welcome on our daily analytical report with Alpari. Today, when we look at the calendar, we do have FOMC meeting, which is usually very important. But today we do not expect any changes, so it should be an uneventful time on the charts. We do not expect any major changes, switches in the monetary policy from FOMC. So that is why we do not anticipate this event as much as we usually do. We are still digesting those movements from yesterday, where American dollar was significantly weaker against other major currencies due to the words from Mr. Navarro, which is a top trade advisor to Mr. Trump. He said that Germany is using their weak currency, so euro, and Germany is the top exporter in the world, and they are using this weak currency for their benefit. And American companies are losing this battle with the strong dollar. Straight after that, Donald Trump said that China, Japan, Eurozone are using weak currencies for purpose. They are devaluating their currencies to boost the exports and to benefit from the export. So it looks like the good times for American dollar are over, and we should see next few weeks of bullish upswing on most of the pairs, like on euro dollar or cable. So American dollar should be weaker. Let me show you the charts. Maybe obviously we'll start with the calendar first. So far we had PMIs from China, which came slightly better than expected, but it wasn't a big change, actually, to be honest with you. Also we had PMIs from Eurozone, from Germany worse than expected, from Eurozone better than expected, so kind of a mixed data. Still to come, PMIs from United States, and as you can see, FOMC decision. Also from the fundamental point of view, we have UK's Parliament first vote on Article 50. From the fundamental point of view, we have stocks which are gaining for the first time in 5 days. So we do have a bit of correction on stocks, and this correction is quite big, as I will show you in a second. To wrap the situation up, Donald Trump complained that every other country lives on devaluation. Also this FOMC meeting, and that would be it from the fundamental point of view, to be honest with you. Yes, also, well, we do have data from oil market today, Department of Energy crude oil inventory report, and from the fundamental point of view, that's it. So let me show you the charts right now. Yes, we do have a chart. This is Australian dollar to American dollar. On Australian dollar to American dollar, we were showing this pair yesterday obviously on a daily analytical report, but also on our trading sniper video, where we stated that the upswing is more probable here than the downswing. Why the upswing? Because of the uptrend, so because of the price making higher highs and higher lows, because of the price being stuck inside the pennant, marked here with blue lines, Pennant is a trend continuation pattern. Trend was positive before forming pennant, so it should result in an upswing, and that's what's happening. We do have an upswing here. On our hourly chart, if you would see that it's upswing here, then a correction. We tested the recent resistance as a closest support with a positive result for buyers, and the price is advancing higher. So the same as yesterday, the sentiment stays positive. Also, new support emerged. Looks very technical. On our chart, if we would close a little bit, this looks legitimate. Let me show you silver. Silver was in our interest for some time. I highlighted this inverted head and shoulder formation: left shoulder here, head here, right shoulder here. The neckline was also a horizontal resistance created by this bottom from October, and this rectangle, this side trend from June, and we finally got a breakout, right? But what is significant in terms of breakouts is that according to price action, okay, we can have a breakout, but it can easily be a false breakout. So how to increase the chances for a legitimate breakout and avoid false breakouts? According to price action rules, if the next candle after the breakout makes higher highs and higher lows, in terms of the bullish breakout obviously, if the next candle makes higher highs and higher lows, we can assume that this breakout will be continued. Even after a few days, we'll have a correction to test this level as a current support. The chances for a success for this breakout are high. And we do have higher highs and higher lows on this candle. So we can assume that even if there will be a bearish correction here, the price should go higher and aim for this green line connecting recent lower high. So we should get a test of this level quite soon, and most probably test will be positive, and well, positive test of a resistance is a bounce. So actually here I'm expecting to have a breakout. I'm expecting for the price to break this resistance and aim at least to 38.2 Fibonacci level. But to be honest with you, I would see the price somewhere here, $1 above the current price of the silver. So we do have this inverted head and shoulder formation, which is active right now. It gave buy signal, and so the buy signal is on the chart of silver. Obviously, we know that silver and gold is highly correlated, so let's see how this situation looks like on gold. On gold is also positive once we defended this 23.6 and 38.2 Fibonacci level. In the short term, we do have a small correction, which is obviously trend continuation pattern. We soon should have a breakout of this resistance. It's a flag, very good looking flag actually, to be honest with you, and we should see the price of the gold $10 higher the current price, so somewhere here $8-10 above the current price. It's almost 1,211, and we should get to 1,219 to 1,220. Where we will get the third test of this resistance, maybe a small bounce, but in the long term we should eventually break this resistance and continue the upswing. Our view on gold is bullish, and we tell you that from the beginning of the year, and it didn't change. Our long-term outlook on gold is still bullish. Euro to Canadian dollar, after this beautiful downswing caused by this shooting star, we do have a correction. How does it look on lower time frames? Well, not very encouraging This is just a side trend right now. So if you use this shooting star for opening a short position, you're probably out of the position right now with some profit. For now, we do not have like any strong signals to re-enter the market with any position, right? It's a side trend. This sell signal was already used. If you believe that this signal is long term, you can reopen short position right now. But I like to open positions on the resistances or supports, right? And here we are between midterm support and above midterm support and below long-term resistance. So it's not a good place for opening position whatsoever, right? I would like to see the prices on either resistance or support. So far, I do not see any of that. New Zealand dollar to American dollar. Here, this can be considered obviously as a false breakout, and you know that after, well, we have 1, 2, 3, 4, 5, almost 6 bullish days in a row. I think that traders are using this false breakout for an upswing. Also, we do have an overbalance here. What is an overbalance? Look at the current downswing, right? The current downswing had one correction, had second correction, and this one is already bigger than the biggest correction in this movement. So it's an overbalance. Once we will be able to close the price above this level, I would say here, that will be a definite buy signal on New Zealand dollar to American dollar. But if I connect the dots here and check the checkpoints here, I can see a bullish situation on this instrument. Why I'm saying that? False breakout, price went inside the channel up formation, overbalance level, attack on this resistance. It all gives me a buy signal on this instrument. American dollar to Swiss franc. Also, we were talking about that instrument recently, where we stated that most probably we'll have a downswing here. Actually, we do have a short position here on our live trading account. It's not like I'm just telling you that there is a nice position and I'm not doing anything with that. Yes, I'm also trading. We do have this live trading program. I show results on our live webinars, live seminars that we're having across the globe. And based on real transactions on real account, I'm showing traders how they should approach the market. But anyway, we had this breakout of an important horizontal support, as you can see here. This after the breakout, we had a nice trend continuation pattern and a huge downswing. Then a correction again, and most probably we'll have another downswing. That's how technical analysis works. Euro to Australian dollar, not Euro to Australian dollar stopped being interesting as it was interesting few weeks ago. After this false breakout, we were kind of in a side trend. I was hoping for an inverted head and shoulder formation, left shoulder, head, right shoulder, but it's not the prettiest formation I can imagine. Neckline is too far actually to benefit from this position, and I don't like it from the price action point of view. British pound to Canadian dollar. As you saw cable, I was showing you the cable, or I will. No, I will. So on cable, we already broke this line on Canadian dollar to on British pound to Canadian dollar. We didn't. Here we also do have this bullish engulfing formation, candlestick formation on a weekly chart. I told you that even despite this correction, signal is still on, is still available. Why? Because it's a long-term position. So even if we had 350 pips movement, to stop loss you have 900 pips. So if you entered this position, probably it was with very low volume, and you should expect to keep it for a long time. What we do have here now is a wedge formation. Obviously, wedge is a trend or a flag, it doesn't matter. It's a trend continuation pattern, so in my opinion, we should see an attack on this line anytime soon. As you can also see, 38.2 Fibonacci level was defended, which is my favorite Fibonacci level, and you see that almost always on our reports or our videos, because it works. It simply works, and and because you probably by now you saw hundreds and hundreds of situations when this level was working. As either support or resistance. To sum up the situation on British pound to Canadian dollar, what I'm seeing here is a further upswing. American dollar to Japanese yen. Also, we almost broke a horizontal support, but again, look where we stopped, on 38.2 Fibonacci level, right? If you're short, if you're a bear on this instrument, I think that the sell stop order below 38.2 seems reasonable. But with the third bounce from this level, I can see here a further upswing. Euro to Swiss franc. We had a beautiful display of price action, but here, downswing, flag, downswing, right? This retracement is a bit too strong, and unfortunately, this situation is wasted. Right now, the price is trying to come back above this horizontal resistance. If they will manage to come back, that will be a false breakout, so a good opportunity for you to go long. If there will be a false breakout, the next resistance for this trade is here, 67 pips higher, which for Euro to Swiss franc is a very good value. But I'm wondering if maybe we had some intervention from SNB yesterday. As you know, they do not like Swiss franc being too strong. So I'm wondering on which candle, if they were buying, and if yes, on which candle. Euro to British pound, still waiting for this head and shoulder formation to happen. Or if they don't want to have a head and shoulder formation, maybe they will break those trend lines in this horizontal resistance here. Or maybe they will break this support if the price will get here. That is a strong sell signal. If the price will go here, it's a strong buy signal. So as you can see, we are exactly in the middle of this formation, so there's no point wasting your time trading here, because when the price is in the middle of a side trend, it can go the other way, and those movements can be meaningless and surprising, and they are often not technically relevant. So no point wasting your time trading inside exactly in the center of the side trend. That's just pointless. American dollar to Mexican peso. I was really hoping that this support will hold. Well, I don't have long position here, but it looked decent. Correction quality movements, horizontal support here, trend line, and they defended this support twice. Maybe that will be a triple bottom formation, and the price will aim for 38.2 and then retrace. But really, I was hoping for a better reaction, and at more, to be honest with you, looks like a breakout. It looks like a breakout attempt here Obviously, American dollar is weaker against almost all currencies, so we shouldn't be surprised that Mexican peso is stronger now. But from the technical point of view, there was a chance for something different here. Euro to Norwegian krone is continuing the movement started by a breakout from this head and shoulder formation, then forming a pennant. Pennant is a trend continuation pattern. Trend started here as a downtrend, so we had a breakout of the lower line of the pennant, and now the price is aiming lower again. But again, it's long-term opportunity to go short. Actually, let me show you something. It's euro to Norwegian krone, right? We find this instrument, yes, here. Okay, as you can see, for going short, it's a good carry trading, positive swaps for a short position. So it's a good occasion for long-term investment, not speculation, but investment. Canadian dollar to Japanese yen, what we're having here is a wedge below horizontal resistance. Wedge is the trend continuation pattern, so we should see the price breaking this resistance and aiming higher. Simple as that, just like that, because that's what technical analysis is telling us, so most probably it will happen. American dollar to Polish zloty here. Maybe you're not familiar with this instrument, that's my local currency, but we just broke 4 zlotys for $1. Psychological barrier. As you can see, we moved from 4 to 3.99, which is pretty significant. But what I would like to show you are those two bearish impulses on 4,300 pips. Maybe, just maybe, we'll have another one here. If the price will decline here and maybe bounce from this trend line, that can be a good buying opportunity on the American dollar to Polish zloty. American dollar to Canadian dollar. Here I was giving opinion on that on our today's trading sniper video, and what was my opinion was that that candlestick from yesterday could be possibly taken as a false breakout. Okay, here, but false breakout usually leads to a movement in the opposite direction, but we do not have it right now, so it looks for me like a decent occasion for a sell stop order. Why? Because if the buyers, they don't want to use such a good formation for a reversal for their favor, maybe they are not so strong and they won't be able to hold this support anymore. So if they will waste such a strong buy signal, when the price does not want to go up, it means that it will go down. So with this candlestick, we know how deep the price can go at the moment. If the price will go deeper, for me it opens doors for the further downswing. And cable. On cable, look at that, maybe GBP card, okay. On a daily, on a weekly chart. This is weekly chart of British pound to Canadian dollar, and this is weekly chart of British pound to American dollar. As you can see, pound to American dollar is much stronger than here. Here we didn't break this line so far. Here we did, and we are advancing higher. In both terms, we do have this bullish engulfing pattern, but obviously due to the weaker American dollar, this cable is much higher. Is it still tradable? Well, yes, in my opinion, yes. Why is it still tradable? Because we already had a correction. We just had a correction. We had a correction starting yesterday and finishing today's at the very morning. This horizontal support was tested, it was proven effective, and now in my opinion we should aim at this resistance here, 160 pips higher. Why this resistance is important? Because it was a support at the second half of 2016 after the breakout. It was a resistance in December. And look, here was tested twice. Here we are about to have a second test. So in my opinion, cable 160 pips higher is a very probable thing to happen in the next few days. Okay, now let me change the accounts where I have oil. This is oil. On oil we are having this, it's not a pennant anymore, it's a symmetric triangle formation. Symmetric triangle formation is not either a trend reversal or a trend continuation pattern, because symmetric triangles can go either way. Is it good? Well, you shouldn't care much if you're a trader, because it means that it gives you decent trading opportunity, and for you as a trader you don't really care if the price will go up or down, right? You're a professional trader and you can earn money in both occasions. So for you it's just a proper trading opportunity. What you should, well, first signal that the price will go lower will be breaking this 23.6, but it won't be a sell signal itself. You need to wait for a breakout of this lower line of the symmetric triangle. And for the buy signal, you need to wait for a breakout of this upper line of the triangle. But as it often happens with the triangles, straight after the breakout, you have horizontal supports and resistances. Maybe let me change the color here on yellow that it differs. Right, so straight after the breakout, price will have to break that horizontal resistance and or that horizontal support. So what I'm seeing here is waiting. I know you're gonna lose few pips, right? Because you would like to open a position here, but you will have to wait 7 cents. Yes, for the price to go lower, 70 cents, or 70 cents for the price to go higher. But at the same time, when you lose a little bit of money, you gain a lot. You gain a certainty on this, right? So you gain more odds in your favor once that horizontal support or resistance will be broken. So that's my view on oil, and to be precise, it's Brent oil. As you can see, because beside that lower line of the symmetric triangle, we do have a horizontal support here, and another one, obviously 38.2, very important as always, also supported. 38.2 is very strong here because it's supported also by the horizontal movements, right? So it was a resistance in October. After the breakout, it was a support at the beginning of December, so it's a legitimate support, now strengthened by 38.2. And DAX. On DAX, I was hoping for a bounce somewhere here. Why? Because we had this horizontal support, potential for correction equality movement, which is now off the table, so I'm gonna delete that, and we had this trend line. Now, a scenario which they are playing right now is a false breakout here, but I wouldn't go long right now. What I would do is to wait for a price coming back above this horizontal support, because as you can see, this horizontal support is legitimate, right? So as long as we stay below this line, it stays the resistance, but in my opinion, we should have a breakout soon. The party goes on. buyers won't resist to buy even more. Now, as it almost always happens recently in the last few years on stocks, every dip is just bought. They're buying every slide on the stocks, and actually now the chart of indexes, charts of many indexes all over the world, they look like we have a V-shape and a drop, then V-shape retracement, then the price goes up, drop, V-shape retracement, the price goes up, then something new happens, drop, it's bought straight away, V-shape retracement, and the party goes on. So that's the situation on stocks. Let's come back to the currencies. So no proper trading signal here, but we do have a buy signal here on Kangaroo, on Aussie. We do have a buy signal on silver, on gold, not yet, to be honest with you. We do have a sell signal on American dollar to Swiss franc. We have sell signal on euro to Norwegian krone. We do have a few also pending orders from the current signals. We do have one on British pound to Canadian dollar and American dollar to and British pound to American dollar, and we have few pending orders on other instruments. That would be it, guys. Remember that when investing and trading an investment in financial markets involves an element of risk. Now a short break, and after that we have a webinar about fundamental analysis, about trading news and macro data. So I will show you my approach for using fundamental analysis in trading. I hope you'll like it. I hope you will join this webinar. Also remember to follow us on Twitter, where we post our trading ideas, our trading views, which are usually spot on. I know that I'm not humble with that, but hey, that's true. We are here to make your trading better, and if we have occasion to do that, we will promote that. So I'm promoting our Twitter account because it contains really good content that you can benefit from. Thanks very much, and see you soon.